YouTube just announced.
Okay, all right. Morning, everyone. Welcome back to our Morning Cup by AM Joseph here. Okay, so can see that over the week, right, especially yesterday, right, the we noticed that the 9988 Alibaba and Tencent 700 have lifted their sentiment in the Hong Kong market, and what do we see recently is that um, you do see that the Hang Seng Index has been moving up strongly recently, right? And you can see that Hang Seng have break past the 800 point resistance, and right now the Hang Seng is trading above both 20 and 50 days moving average. In terms of technical setup, right, Hang Seng Index is showing a bullish technical setup right now. Now, one thing that I want to bring to attention is that on the 20th of July, right, the Chinese authority, the CSRC, have come out and they meet the investors, especially the institution investors, to calm the market sentiment, right? They call it the market stability meeting, right? It took place on the 20th of July. And what happened is that since then, right, from 20th of July until today, right, you do see that the Hang Seng market, especially the Hong Kong market, is actually moving on a one way up. Right, shows that this meeting do manage to give confidence on the to the investors, and um, finally, right after the consumer stocks have actually took off, right after the bank stocks have went up, right. Lastly, we do see that finally the tech stocks also follow suit and actually move higher. So in the Hong Kong Hang Seng Index, the heavyweights are the Alibaba, right, Tencent, Xiaomi, as well as the SMIC. These are the four uh, tech stocks that have weightage on the Hang Seng Index. Hence, yesterday I do see that this Alibaba have managed to break out. I think that the trend should continue. All right, so we can pay attention to both Alibaba as well as Tencent, or the SMIC as well as the Xiaomi. These four technology counters. Okay, and you look at the AI news, right? Alibaba have rolled out their own AI better versions last week, and with all the latest announcement and also the trade flows, right? Alibaba right now is showing a very strong bullish setup, right? Potentially, right? It could move towards the 200 days moving average line, yeah, and looking at the US market, right, the sentiment also turns better after over the weekend. On Saturday, Trump have posted in the social media that it's going to stop all the fresh attacks on the Iran, and they're going to sit down for peace negotiations again. So Iran yesterday have confirmed that they are in talks with Oman, but not with the US. But nevertheless, at least the this attack by the this U.S. Navals at the this Hormuz Straits have taking a pause right now. So on the Monday sessions, you can see that the oil price have took a big dive. Right, right now the oil price have went below the 20 and also the 50 days moving average. And I think about a week ago, right, we also saw a gap down on the crude oil, and that's where we have changed from a bullish to a bearish on this gap down day. So as of today, right at around $80 per barrel, we're still holding our short positions on the US crude oil, and we set our stop loss at 86 level. Okay, and we look at the S&P 500 yesterday. I think the S&P 500 managed to climb above 7,005 right now, showing that market sentiment remains bullish so far. So since the market become a risk on, right, and just in a short space of a week time, right, you do see that this Microsoft share price have actually surged up. Now, you recall that during the morning kappa sessions, I've mentioned to you during the second half of the year, one counter that you should put in your watch list, or in fact your portfolio, should be the Microsoft. Right. One key thing is that second half of the year, I think market is not so talk so much on Iran. Iran is important. The war is important. Tariff is happening, but most get the market excited in the second half of the year, I think, is the OpenAI IPO. It's going to happen anytime soon. I'm not sure when. But you look at the OpenAI, right? Microsoft have a 27% stake in the OpenAI, and Amazon just completed their 50 billion investment in the OpenAI for a 5% stake, right? And you see that Amazon shares have actually went up 2 days ago. And imagine that Microsoft, right, this company have a 27% on OpenAI. If OpenAI were to really go on IPO, right, I'm not sure how high the share price will go up to. And you can look at the price actions. Once a market turn risk on, once the oil price came down, right, with a very good quarter results, and you can see that this Microsoft share price have I can say the word skyrocketed, right? Uh, so these are the four black color lines that I've drawn on the Microsoft, and I mentioned to you many times again, right? The price volume profile, and look at this level. This is a very good level to look at Microsoft. Once it cross this price volume profile resistance, it should likely to actually move upwards, right? And it shows that just in a space of 3 to 4 trading days, Microsoft actually went up to almost $500 US right now. Um, So I think the questions now is, should we go on the momentum trades? I think the only way that I can comfort you is that think about OpenAI by the end of 2026. Yeah. And then on with the oil price coming downwards, right? And of course, one of the beneficiaries will be the company that rely a lot on the oil price, such as the airline counters. So United Airlines, you look at the share price have went above their price volume profile again. So I think that the share is actually moving upwards to 128, and next level will be 136, and then on it should also travel towards 140, right? Despite the oil price is actually hovering at a high level, you look at the air traveling, right? The traffic did not slow down despite that higher airfare right now. So with the oil price moving downwards, right, with more earnings coming back for the airlines company, I think the investor will be positioning on the airline stocks. Now, apart from that, since the tech counters are moving up, the AI stocks are actually moving up, right? We're also looking at another counter that just about to release their results soon, which is CrowdStrike. So look at Iman's report yesterday, right? He also actually pick up CrowdStrike, that the stocks are showing a bullish setup right now. So at the Malaysia space last week, just before we head for the Negeri Sembilan elections, you do see that the FBM KLCL on a weekly basis managed to climb above the 20 weeks moving average. It's showing that smart money have positions in the market just before elections. So post-election this week, I think that as long as the FBM KLCI stay above this 20-week moving average, as we moving into the August month of the quarter results, I think seasons, I think the FPM KLCI likely could climb towards 1750, right? So at this juncture, we stay bullish bias on the FPM KLCI, and last week you do see a very strong rebound on the two sectors that I want to highlight to you. Firstly is the technology sectors, second is the actually financial services, and thirdly consumer sector also rebounded strongly over the week. So we look at the Bursa Malaysia Technology Index. It have actually gapped up on the Monday. There's a mild profit taking yesterday, but overall, right, the whole setup show bullish as of now. And then on the consumer sector also climbing higher, and some of the market observer have actually mentioned that before government heading for the general elections, nationwide elections, usually there will be more hands out by the governments, and consumer stocks could be one of the beneficiary. Now, so before the Negeri Sembilan elections, I think the PMX have mentioned that it's actually contemplating to actually increase on the handouts, and you do see that some of the consumer stocks start to actually moving upwards. So I think these are the three sectors that you should actually pay attention to during this August result month. Firstly, is the bank counters. Secondly, the tech, and thirdly is the consumer sectors. So as for the one of the tech stocks are not under our coverage, but on the technical space, I see that it's showing a very strong price actions. Nation Gate is about to break past 1 ringgit and 25 cents. The next higher resistance will be 1 ringgit and 35 cents. Downside support is at 1 ringgit. And then on another consumer stocks that Aiman have discovered is actually QR Resources that have a break past 4 ringgit and 10 cents, heading towards 4 ringgit 30 cents, and followed by 4 ringgit 50 cents. Downside support is 3 ringgit 90 cents. Then on MBM Resources also climb above 4 ringgit 80, and R1 is 5 ringgit and followed by 5 ringgit 20, and downside support is 4 ringgit 60. So we have two breakout stocks. Firstly, QL Resources, and followed by MBM Resources. So I stop here and pass the sessions to Cotwood. Thank you.
Okay, thanks, Joseph. Yeah, so moving on to the property sector, we have this second quarter strategy report, a bit late, but still not too bad. Okay, we are maintaining our overweight sector rating. Of course, the demand is somewhat softening, but we think, this current mini down cycle should be short-lived. There are a few key observations here. First is that developers are still reporting strong sales in the industrial segment, which suggests that the local and foreign companies are still actively expanding, and therefore job opportunities and income growth should be supported. Second, demand in the high-end segment remains rather strong, driven mainly by upgraders, foreigners, and also investors. Third is that the low to mid-range resi segment is relatively more susceptible to changes in market conditions. Therefore, we think as soon as the Middle East conflict and the local political landscape stabilize, the overall demand for property will recover, especially in the mid-range segment. We believe fundamental demand for property overall still staying healthy. All developers that we cover are keeping their pipeline launches and sales targets unchanged. Major corporate exercises such as REIT listing and also property asset and land bank acquisitions are the key sector drivers. Of course, the market may potentially interpret the results from the recent two state elections as indicators for the unity government solidities and also voter support. This election noise may weigh on the broader equity market as well as the property sector. So historically, the sector tend to range bound 6 to 9 months ahead of general elections due to investors' concern over some uncertainties, especially on the country's economic policies. And also, other, let's say, big infra projects in the past, which we experienced in the past. So, this pattern, we saw it during the past 3 general elections, which is GE 13 in 2013, GE 14 in 2018, and GE 15 in 2022. So this time round, we think, the market should also portray a similar pattern. So given the current situations, we find better confidence in the Iskandar Malaysia property market. Over the near term, I think by end of the year, we should see the government unveiling the special economic zone investment blueprint and also the master plan. And also by end of the year in December, the RTS link is on track to be completed, giving visibility and hence confidence to the market. Local and foreign investment interest in manufacturing and also data center thus far remain intact, and this should continue to support demand for property, including landed homes, commercial shops, industrial land and properties, and selected high-rise projects in Johor. UEM Sunrise and EcoWorld could be good proxies for this. Elsewhere in the Klang Valley, we think the bread and butter township products are still, the key, are still rather resilient. So therefore, will form the basic, the base property sales base for most of the developers. And the major infra that was completed recently is the new LRT3 Shah Alam line linking Bandar Utama to Johan Setia. For the Penang market, although no major infra to be completed over the near term, the expansionary mode of Penang-based AI-related semicon players is set to benefit the industrial development segment and hence supporting the housing demand. As industrial land is scarce even at the mainland area, major investments tend to concentrate at Batu Kawan, and there are not many strategically located industrial parks in the mainland area, as land parcels near to the Penang Bridge and also Second Bridge are mainly privately held. So among the developers under our coverage, EME Elite is a major player, and in the industrial segment, they have this industrial park near to the Penang Bridge on the mainland side. And of course, for the property market, E&O is the proxy for the Penang side. In terms of valuations, the sector is currently going at 55% discount to RNAV. This is hovering closer to the +1 standard deviation from its long-term historical mean. So although, the sector valuations may appear to be elevated, this is largely held up by the sharp re-rating that we saw in both Sunway and also iProp over the last 3 to 6 months, or rather year to date. Valuations for the other stocks, we note that they are remain largely unchanged. So as we mentioned earlier, fundamental demand for property still rather healthy overall, although somewhat softening sign that we saw in the mid-range segment, but the key sector indicators like the industrial and also the high-end segment are still doing rather well. As we can see, there are 3 recent transactions in the KLCC area as well by Exim, by Massing, and also the latest one, E&O, that was just announced last Friday. So, also signaling the market confidence towards the high-end segment in the city sector. Other catalysts like REIT listing and land bank acquisitions are the key drivers for the sector. So overall, our topic is Ecoworld. We like the company for its solid track record, property sales that have never disappointed, strategic land bank and industrial exposure in key growth areas such as Iskandar, Malaysia. Its recurring income will also start to kick in from second half 2027 onwards upon the completion of the data center core and shell facility. Let me stop here and I pass to the next presenter, Iftaar. Thank you.
Hi, thanks, Godwin. Good morning, everyone. We have a Sime Darby results preview. We maintain buy with a slightly higher TP of RM2.40 from RM2.27. A few new things. The first one is that Sime Darby's results will be out on 27th of August, and we expect core PATAMI to come in about 300 to 330 million. And this is plus 15% to plus 25% Q on Q. We think the better sequential growth will be coming from higher car sales and as well as potential rebates from its China division. Management didn't guide on the quantum of the rebates, but on a full year basis, they are looking to be at least break even or just marginal losses. Secondly, is that it is now becoming more convincing that BMW Malaysia will announce a dividend to Sime Darby in its upcoming results. So again, no guidance from management, but we estimate that it could be somewhere between 100 to 120 million. So note that this dividend from BM Malaysia will flow straight to Sime Darby's EBIT line in the sub-segment. So if this does happen, we estimate that there could be a further 5 to 7% upside to our current FY26 numbers, and will also slightly increase Sime Darby's dividend per share by about 1 to 2 cents. And thirdly, on the industrials segment, management guided that the adjustments for ASPs will be flattish for second half of this year. So meaning for first half of FY27, we are looking at a largely stable performance coming from industrials. However, we are aware of the potentially cautious activities from the miners in Australia. So overall, we increased our earnings by about 4% for FY27 and FY28, but we kept our FY26 estimates largely unchanged. So our valuation now is looking more attractive. Now it's trading at -1 SD. With a handsome dividend yield of about 6 to 7%. Yeah, so that is all from me. Thank you, and I'll pass on to the next speaker.
Thank you, Iftaar. Morning, everyone. This is Vanessa from the Warrants team. So I make a special appearance today because we have new warrants listed yesterday. Okay, this is the list, if you can actually look at it. Yeah, so we actually have prepared counters or underlyings varies from the tech sector. I mean mainly from the technology sector, and we also do have EcoShop C13, Top Glove C5Y, healthcare, and also the consumer sector for whoever is bullish in all these counters. All right, so yesterday we actually see high traded volume for almost all of our new warrants. All right, so we actually see the top was VTROX C26. The exercise price was is at 8 ringgit, and also it was about 5.6 million units traded yesterday. And besides from VTROX, and we actually have some other technology counters like SCG Berhad C3, DNEX C55. We have also Mi Technovation Mi C53 and CITOS C38. So if if you are bullish and all, then you can actually explore on structured warrants of all these counters. So why people normally invest in structured warrants is that they actually have this thing called the leverage effect, and it's actually reflected by effective gearing. So when you see an X, means it's a multiplier. So this means that so it's a multiplier. So which means that, like for example, VTROX gain by 1%, and VTROX C26 will potentially gain by 3.2%. All right, so this is when the case is, you know, an upward situation, but once the share price came down, then this will actually lose around 3% as well. All right, so it's really important for you to know how to use the live price metrics to gauge your entry and exit price. So maybe I'll also bring your attention to another banking name, CIMB, and CIMB C2T will be one of our spotlight warrant as well. I mean the warrant under our spotlight as well. So if you look at these price metrics, at the first glance, you actually notice that this is actually a responsive warrant. When you see there's only 3 ticks and then the price of the warrant change already, then another 3 more ticks in CIMB, then the warrant will actually change from 17.5 cents to 18 cents. Yeah, so this is what we call the sensitivity. And if you are someone who's bullish but with a shorter term of horizon, then you can actually look for something with lesser ticks of movement. So I'll share with you on this warrant metrics screen. So this VTROX C26, Mi C53, and IOIPG C59, they are all our newest listing. So for one glance, you'll be able to see which is, like for example, VTROX is not that sensitive with a sensitivity of 7.5 ticks. So you might actually require more patience in waiting for it to, flip up. While for Mi Technovation, Mi C53 is only 4 ticks, and also IOIPG C59 is only about 3 to 4 ticks as well. All right, so if you know how to use these price metrics, then they will actually help your investment, also your trading strategy a lot more if you are actually investing in structured warrants, especially RHB issued warrants. Okay, so yep, so if you have any other questions, all right, so do feel free to call us. I will show you our hotline. So this is our hotline at 0392002185. So if you have any questions, just call us, or maybe you can just check with your dealers or reminders regarding any questions about structured warrants. All right, so that's all from us today. Thank you so much for dialing in, and we'll see you tomorrow at the same time, RHB Morning Cup at 8. Thank you.